Hello everybody, good afternoon. Thank you for joining us today. I'm hoping that you can all see some slides that I'm sharing at the moment. I might just give it just one more moment and then we'll get started. We've got quite a few people that have registered for today's event. But thank you for joining us. I think we've got quite a good turnout. I've got a few more people joining the meeting room and then I'm going to begin. Now we will be recording this session just none of your faces will be on camera or any of the questions that you've submitted, so it's certainly confidential from the audience perspective, but we want to record this so that you've got an opportunity after to brush up, refresh on the content that you've learnt today, and also for others as well who missed this particular session. So thank you all for joining. I'm going to start now. My name is Sarah Ellis and I'm the head of after sales at Resi. Now some of you might be wondering who Resi is, so it's probably worth me just starting with a little bit of an explanation and an introduction. Now, Resi is effectively the development arm of MT. We look after the property part of MTVH. So we deal with development, new builds, property sales, and of course staircasing, which is why you're all on the call today. Now, this is our first time doing this on Teams. This is live TV, so I'm hoping that this is going to work out okay. We don't do too many of these educational sessions, so in all honesty, we probably should do more. So I'd really love to hear your feedback and also any suggestions on any other topics that you, as our customers, would feel would be beneficial to you. Now, one thing you might be interested to learn is that actually a lot of Resi staff actually own a shared ownership home themselves. So sometimes you'll be speaking with colleagues across the business that not only help support customers through their shared ownership journey, but they're also living it themselves. So they really understand it from a consumer perspective too. Now, today's session is all about staircasing. Every year, the Resi teams help hundreds of people staircase. They'll invest in their own equity whilst reducing or even eliminating their rents entirely. But what I would also like to put out there is staircasing, it's not for everybody. Some people are quite happy having a share of their home, having that security of tenure and living in an area that they love. Assuming that's not why you're all on the call today, because you're here to learn a little bit more about staircasing. So today what we're going to do is we're going to explain how staircasing works in practice. I've got Sarah Johnson on the call today, who is our staircasing manager, and she's going to talk about the process from the housing association's perspective and some of the rules that we have to follow from the government. And I've also got Paul Wilson, Director of Just Mortgages, and he's going to be talking about the financial element of staircasing and how it works with shared ownership. And then I've got a lawyer on the call as well, Nolton Sembari from New Riverside Legal, who are shared ownership specialists, and he's going to be guiding us through the conveyance process. So hand you over now to my colleague Sarah Johnson, who's going to talk about the Housing Association's process for staircasing. So over to you, SJ.
Thanks, Sarah. I'll try to stick to that 10 minutes and I'll try not to speak too fast. So my name is Sarah Johnson. I'm also known as SJ, as there are a plethora of Sarahs in this office, so feel free to call me SJ. I work alongside Kira Brown, and we manage the staircasing team. So there are several components to the staircasing process, which are inquiry stage, valuation, solicitor instruction, progression, and completion. So these steps have been put in place to create a seamless process. So let's delve into what these components are. Next slide, please, Sarah. So the first stage we have is the inquiry stage. Once you decide that you want to staircase or you just require a little bit more information about staircasing, there are several things that we check once you make contact. Some of the information we check, such things like if you own a house or if you own a flat, we check if we are the freeholders or if we hold a leasehold title on your property and we act as a landlord on behalf of the freeholder. We also check if you live in an apartment, we'll check if your block is over 11 meters or 5 stories high, which would make it a relevant building under the Building Safety Act. The reason we check these particular components is because they have the ability to slightly lengthen the transaction. So checking this information just allows us to be well prepared and allows us to manage your expectations as well. So we'll pick up the phone, we'll have a conversation with you, and we'll also send you what we call an inquiry pack. This has further information about the staircasing process. We'll then explain the documents we'll need in order to get to solicitor instruction. So let's look into that. Let's look into those documents. Next slide, Sarah. So the first document we are going to need is what we call a valuation report. In order for us to calculate what the value of buying extra shares will cost, we first need to work out what the full market value of your property is. So to determine the full market value, you need to instruct surveyors to conduct a valuation on your property. We do have a panel of surveyors, which we will recommend, but if you decide to outsource your surveyors, they have to be RICS certified surveyors. Please note that MTVH do not instruct surveyors on your behalf. This is actioned by you, the leaseholder. You will organise your RICS surveyor and arrange payment. The surveyors will come to your property in order to conduct a valuation. But considering those costs, if you hang on till the end, as Sarah Ellis mentioned, she will discuss support for those costs. So once they've been round your property, they will draft a valuation report and send it to you. You need to send that report to us to process for approval. In order to approve the valuation, we conduct more checks. We check if the surveyor is RICS certified, as mentioned before. We check if the surveyor has included comparables, which would give a strong insight to what properties like yours around your area has sold for. We check if the survey has factored in any information that might increase or decrease the value, such as if you own parking, if you have a rear extension to the back of your property. We also check if you've conducted any home improvements. The surveyor will identify the difference in value. Please note, before conducting any home improvements in your property, you do need to attain permission from MTVH. So if you did attain permission, which is in accordance with your lease, we'll deduct this increase of value due to those home improvements from the full market value, which will be identified on the valuation report by your surveyors. Once we conduct our checks and we're satisfied, we'll approve your valuation and move on to the next stage. If, however, your valuation is rejected for any reason, we'll give you a call and we'll explain why and inform you of any rectifications needed in order to finally approve your valuation, which would then finally bring us to the next stage. Next slide, please, Sarah. Solicitor instructions. So once your valuation has been approved, we'll send you a couple of things. We'll send you what we call the offer letter. This will contain further information about the process and the timescale from solicitor instructions to completion. This will also include acceptance of offer form. We'll also send you a link to our free automated system checkboard. This checks proof of address, proof of funds, and AML, so anti-money laundering, which is the most seamless and cost-effective way to check and approve your identity and how you're funding the staircasing shares. So at this stage, we then would encourage you, we'll give you another call, and then would encourage you to speak to a financial advisor. We work closely with Just Mortgages, who are financial advisor specialists, so to discuss lending and what mortgage options are available. So Paul's going to handle that section. Then, in order for us to instruct solicitors, we're going to need a couple of those documents back. As stated, the acceptance of offer, You'll need to fill out a form, and it's going to have solicitors' details, your solicitor's details that you instruct. We'll need a completed checkboard report. So don't worry, we'll download that off the system and save it on file. We'll also need a mortgage in principle. It's also known as a mortgage illustration, a decision in principle. This is not the official mortgage offer. We don't need that just yet. We're happy just to accept the decision in principle or mortgage illustration. Last but not least, we need you to confirm that you actually have instructed solicitors. There's been many times where we call your solicitors and they said, well, we haven't been instructed just yet. So that's another thing we need confirmation of. Once all the above has been attained from yourself and given to us, we then move on to what we call a progression stage. Next slides, please, Sarah. Once solicitors are instructed, depending on the type of transaction you are conducting, this will determine how long the transaction lasts. So a traditional staircasing is if you are buying a share but not up to 100%, or if you are buying 100%, we call it a traditional staircasing. This can last between 6 to 8 weeks. Our solicitors will pull off documents from Land Registry. This will contain your lease, your title plans, and your registered details. Our solicitors will go back and forth answering any legal inquiries that have been raised off the back of those documents. And Knowlton will be speaking more about that later. If you are staircasing below 100%, our solicitors will also need to approve the mortgage offer, which is not done if you are staircasing to 100%. If you, however, are conducting a simultaneous staircase and sell, where you are staircasing to 100% and you're selling to a buyer for 100%, this takes a little bit longer. It takes between 12 to 14 weeks. So the process is a bit similar, but the buyer solicitors now get involved. They do their own searches, and also you might need what we call a management pack. It's also referred to as an LPE1 pack. And off the back of that, further inquiries are raised between all three solicitors, hence why it takes a little bit longer. So once all solicitors are happy with the answers to those inquiries, everyone's happy with the documentations, everyone's happy with any amendments, then we move on to the last stage. Next slide, please, Sarah. So once we move on to this stage, it's all about completion. Once everyone is happy, we'll set a completion date. We'll talk to you to see when you would like to complete. We'll also confirm that with both solicitors. Once agreed, our solicitors will draft a completion statement. This will have all the details of how much the shares cost and any solicitor fees. Once that's approved, we wait for a completion date. Once the completion date has arrived, we'll give you a courtesy call, just say congratulations on completing, and we'll also send you what we call a welcome letter, just giving you more information of what you do post completion. For example, if you have any ongoing service charges, etc. So in short, I hope that was short. I think I've gone over, but in short, that is the staircasing process. We do have an amazing team who are very ready and willing to help you. So yeah, please give us a call or email us, and hopefully we'll get back to you in 24 hours. If there's so many inquiries coming through, you might want to increase that to 48 hours. But yeah, that is the staircasing process. I hope I didn't talk too fast. And moving on. Thank you, Sarah.
Thank you, SJ. So as you can see, there's quite a lot that goes into it just from the housing association's perspective, but I don't want people to feel daunted by that process, because you're not in it alone. You would have a dedicated consultant who will work with you to help guide you through the steps. So this isn't something that you have to feel that you're alone with. Now, one thing that SJ mentioned earlier in the call, and I should have mentioned in the introduction, I would just encourage everybody to stick around to the very end of this presentation, because I'm going to be sharing some details about some financial support that we're going to be offering to help cover certain costs. So make sure you stay tuned. We'll also be going through customer questions at the very end. So I'm now going to move on to Paul Wilson from Just Mortgages. So over to you, Paul.
Thank you, Sarah. Good afternoon, everybody. Sarah has kindly asked myself to provide you further information on the financial side of staircasing and the mortgage side. Just Mortgages arrange many mortgages for purchase, remortgage and staircasing across the mortgage lenders. And I'd like to probably start with most clients' initial journey, the original journey. If you could pass on the next slide, please, Sarah. Thank you. And most clients' original journey, where they purchased or yourselves purchased a shared ownership property that you'd like to live where you worked, near parents, or where you rented a property, or two or three of those reasons. And after financial qualification, you realise the dream of 100% ownership property wasn't a reality. And then shared ownership was your best option. So, and that's the case for many clients today, particularly first-time buyers looking at new build or second-hand property in a certain postcode, that they'd like the original 100% ownership. But the average ownership, shared ownership property, as on the slide you can see, seems to be around the 25% mark of original purchase over the last 5 years. And obviously everyone's aim initially, that dream was 100% ownership, and that's still the case with most clients we speak to. And of course, the benefit of staircasing enables you to climb this ladder, as an example, from your initial shareholding and hopefully up to the 100%. Thanks, Sarah. Next slide, please. So, common client situations when we have a financial assessment with clients. Many surprisingly haven't actually reviewed their shareholding options since the initial purchase, or most clients would have a shared ownership mortgage at the moment, haven't considered, is their current mortgage still the best option, or what are the best options out there once their product rate expires, or their own situation changes, etc. And upon experience, once we have that full financial assessment with a shareholder leaseholder, is that most clients, if they can, would like to proceed and staircase their property from that, say, initial 25% shared ownership up to 50, 75, or even 100% ownership. And I think the bottom line there is the biggest thing. Most clients still strive to own 100% of their property, and we're here to hopefully help people with that journey along to that 100% mark. Thank you, sir. So this is the common question we receive: are mortgage lenders supporting shared ownership and staircasing? And the very positive news, over the last 5 to 7 years, we've seen a very steady increase of the choice of mortgage lenders within the shared ownership sector. Some high street names, small building societies, banks, etc. So we have a great mix of mortgage lenders we can discuss with every client now, and some clients will obviously be having a mortgage with some of the names listed. The next slide, Sarah, just highlights a few of the names within the shared ownership market. Your current lenders as clients may be there, but I would say we've got between 25 and 30 mortgage lenders within the market now, where 10 years ago there was probably just 3 to 5 mortgage lenders. So that's a massive positive when we look at options for each client, whether that's linked to salaries, mortgage terms, location of properties, etc. And of course, upon financial review, we will consider your current mortgage lender plus the options out there for you for looking at the best rate, the best staircasing option, or remortgage product rate, etc. Because of course you could be looking at staircasing, but you may be on a 5-year fixed rate which may be expiring or expiring next year, etc. And that is all part of our conversations with you. So very positive on the mortgage lender slide. And the next slide just really highlights what our offering with Resi, working very closely, as Sarah said initially, with Resi. Once we have a full financial appointment with a client regarding staircasing, many conversations overlap, but it would involve, as it says on the slide there, we can provide free current financial situation review with every client. We will establish what your existing mortgage lender is and product rate and when that expires. And that brings up into the conversation of your staircasing options within that mortgage lender or a different lender, taking into account every situation, every payment charges, term, etc. But the best options available on your mortgage and staircasing we can provide after that full appointment with every client. And also what we'd like to do with Resi is to provide a regular contact within, say, a 12 or 24 months period, because it may not be something you want to proceed with straight away, or your financial situation may be changing ahead. So we can diarise for that further conversation to discuss your mortgage and staircasing options. Thank you, sir. So what are the next steps for the mortgage side? I have a team of 30 shared ownership mortgage specialists who would love to provide that advice to you. But as Sarah Johnson just said, we will collate various bits and pieces from the jigsaw to provide that advice to you. And that'll involve the property value, which Sarah said, obviously how you can proceed with that. We'll provide a full mortgage review, provide your best options to you now, 3 months, 6 months, 12 months ahead for you, and a full staircasing review working with yourselves and So Resi to enable hopefully most clients to increase their shareholding and obviously tick the box on affordability and options ahead, whether that will be 5%, 25% or 100% home ownership. At least I think the very positive thing from this webinar is everybody will be offered the chance to have that financial review to see if that opportunity is available and if you can actually proceed on that basis. Thank you, sir. So we have our contact details. As Sarah said at the end of the webinar, there'll be further news on some positive news from So Resi with regards to an incentive. But myself, Emma Rowe is part of my team, so please don't hesitate to make a note of the telephone number for contact for Emma and her email, and hopefully we can be providing that full advice, as you've seen on these slides, for the mortgage and staircasing review free of charge. And we are available 7 days a week, so weekends is not a problem to you. Early evening, whatever fits best in your diaries, we're here to provide that full advice to you all.
Lovely. Thank you so much, Paul. That was really insightful. And just to everyone on the call, we do work very closely with Just Mortgages, and I would encourage you when you are seeking financial advice, just making sure that the advisor that you approach understands the shared ownership product. Paul's just explained several lenders that will offer shared ownership, and it's really helpful to go with a broker who can also guide you through that process. But great, thank you, Paul. I'm going to now move over to Knowlton from New Riverside Legal, who's going to share with us the conveyancing process. So over to you, Knowlton.
Thank you very much, Sarah. Good afternoon, everybody. I am a solicitor and I have worked with So Resi or Metropolitan for many years on their side, and now I am acting for buyers. So I represent the buyers, leaseholders in their staircasing process. I have put together these slides and have come up with some common questions and have tried to cover the entire process as if I was you and as if I was staircasing. So here we go. Next slide, please, Sarah. Right, so eligibility and process. Now, this is the very beginning of the entire process. And the first question is, am I allowed to staircase under the terms of my lease? There's no legal involvement at this point. You just submit an application to the Housing Association for permission to buy additional shares. You don't need to contact the solicitor this early. You just need to get in order your finances and make a decision effectively and contact So Resi and make an application. What are the steps involved from start to finish, and how long does it typically take? Well, you've got to apply, you've got to arrange the mortgage, as Paul said, you've got to instruct your solicitor, basically contact us, and you've got to complete. The timeline can be anything from 2 weeks to 6 months, as SJ mentioned. There's a lot of variables here, but that's pretty much the sort of the main steps. If you want to have a chat to somebody at the very early stages to see what the process will be, I think the first port of call should be the Housing Association, i.e. Metropolitan, and then if you want to speak to one of us, you will have the telephone number at the end of the slides. The next question I'll put down is, do I need to notify the Housing Association before instructing you as my solicitor? Yes, please. Communication leads to a smooth transaction. So you can instruct us, and you can let the housing association know, or you can tell them that I'm instructing a new Riverside Legal. I've put down communication leads to a smooth transaction. That's exactly what it is. It just helps. Next slide, please. What happens if I disagree with a valuation? Well, the lease states that the valuer's decision is final and binding. You may be able to order another RICS valuer at your own cost. We advise that you speak to the housing association. Again, this is early days. The solicitor is not involved at this time. What costs should I budget for? Legal fees, lender's fees, valuation, stamp duty, notice fees, housing association fees, mortgage fees, etc. All of the above, but please do not hesitate to ask. Each party in a staircasing transaction pays their own legal costs. The cost of the valuer, however, is paid by the leaseholder. Will I need to pay stamp duty on this staircasing? If so, how much? There are several variables taking place here. So SDLT is not exactly user-friendly to shared ownership, but if you staircase to 100% and sell simultaneously, you can claim relief, so there will be no liability. Again, we will be able to advise on an individual basis. SDLT, it's just one of those sliding door situations where you could very easily end up in a completely different outcome by taking a specific route. So there's no blanket approach with SDLT. Next slide, please, Sarah. Will the housing association's solicitor require anything specific or unusual? What they will require is a copy of the valuation, a copy of the mortgage offer if it is interim, or anything which is not final staircasing, a copy of the signed memorandum of staircasing. But these are points that your solicitor, myself, or my colleagues in the office will deal with, and we will deal with the questions of the housing association solicitor, so you don't need to worry on that one. Are there any restrictions or conditions on staircasing in my lease? For example, minimum tranches? Yes. So at this moment in time, there are in existence two types of shared ownership leases. There is what we call the new lease, and there is the old lease. On the new lease, there's a minimum of at least 5%, and on the old lease, the minimum is 10%. There is a new way of staircasing, which is the 1% staircasing. This is only allowed within the new shared ownership lease. This webinar will not be discussing the 1% staircasing process, but it's effectively in the lease, and it does not require involvement of a solicitor. You can buy 1% every year for 15 years from the date of the lease, or the date that you purchase an existing shared ownership lease that has more equity left in it. There is another type of shared ownership lease that has a limit to staircasing, which is what we call the designated protected area lease. They only allow staircasing up to 80%. These are very rare. If you have one of these, do contact me. You can call me and I will speak to you. And if I have a look at the lease, I will be able to tell you. But again, that's outside of the scope of this discussion. Next slide, please, Sarah. Lease and title implications. Will staircasing change any terms of my lease? Not for interim staircasing, it will not. It will just remain the same. For flats, final staircasing will remove all the shared ownership provisions. So you effectively become the same subject to the same provisions as all the other private owners in the block. For houses, the shared ownership lease goes away, and you acquire the freehold. So in effect, you become private owner of the property. What happens to my rent, to my rent payments after staircasing? So reference to rent payment here is to the rent that you pay on the unacquired share. So they are reduced is the answer, effectively, and the housing association will take care of that. They will let you know how much they are reduced by. If I achieve 100% ownership, will the freehold be transferred to me automatically? For houses, yes, but not for flats. Will any restrictive covenants, rent review provisions, or service charge arrangements change? Well, restrictive covenants and service charge will remain the same. So you are still living in the property, so you are still owner of that legal interest. So you will remain subject to those covenants, restrictions that are in the lease, or that the house or the flat is subject to. The service charge will also remain the same, and that's because even though you own a part of the equity in the property, you do have access to full service charge, to full services within the property. So that's why you are subject to payment of full service charges. Rent service, that's the rent paid on the unacquired share, will change. It will either be reduced or gone, depending on the type of staircasing. Next slide, please. Timescale and practicalities. How long do I have to complete the staircasing once the valuation is issued? This is 3 months, as mentioned by SJ. From the date of the valuation, the Housing Association can extend this to 6 months with good reason, of course. What delays commonly occur and how can I avoid them? I've put mortgage offer ! Because that's by far the most situation that gets delays. So please do have that in place, or have that in principle agreed with Paul and his team, and we'll take the transaction forward. Next slide, please. That's right. Resale. Oh, I'm jumping ahead. Post completion, how will my rent be calculated after our staircase? The rent will be reduced in accordance with your share increase. The formula is in the lease. Do I need to inform my insurer or mortgage lender after completion? No, there's no need to do that. Will there be any changes to my service charges? No, as I mentioned earlier, you still have access to full services. So no. What documents will I receive at the end of the process? You will receive a letter from your solicitor to confirm that you the new share purchase, and a copy of the memorandum of staircasing. Please do keep these documents safe. They may be needed the next time you would like to staircase. Next slide, please. Resale and future considerations. If I staircase to 100%, will I still need to offer the property back to the Housing Association on resale? No. Will future staircasing be simpler once I've done my first tranche? Well, I've put a cheesy yes, but I think that's obvious. And that is the end of my slide. I did not want to bore you with the structure of the process. The process of staircasing, as far as we are concerned, is simple. You contact us. We need you to sign a copy of the memorandum of staircasing, a copy of the mortgage offer. For staircasings that are less than 100%, we will send that mortgage offer to the Housing Association to approve. For mortgages, staircasing that are final and go to 100%, there's no need to do that. Once that's done, and you have the mortgage in place, we are all ready to proceed. Famous last words, but that's me. You've got my contact details on the screen, and thank you very much.
Lovely. Thank you, Nelson. And once again, I know I spoke about specialism when I spoke about Paul, at Just Mortgages piece there, again, it's really important that when you're approaching a lawyer to help you with anything shared ownership, if you're selling a home or if you're buying more shares, it's really important that you go to a specialist who understands the process. It can be the difference of getting a staircasing transaction through in 4 weeks or 6 months. So go to someone who really knows their stuff. So thank you, Knowlton, there. Now, we've spoken quite a bit about costs, I think, throughout the journey of this webinar, and I'd like to share with you some support that we're going to be offering to help with these costs on your staircasing journey. So we're offering £1,000 towards your costs. So we're hopeful that's going to help support with costs such as your RIC survey and legal costs. We would deduct that £1,000 off your statement on completion of your transaction. Now, this is an offer that we're offering out to everybody to complete on your new share by the 31st of March next year. We will be sending out some letters and some emails as well that will sort of reinforce this offer. But if you want to inquire, if you want to learn any more about it, please do get in touch with any of the people on this call. We are going to move out to questions now. I'm just going to share our contact details again there, so please make a note of these. I'm now going to take off slides. It feels a bit uncomfortable answering questions when we've got a slideshow going on in the background, so I'm going to turn that off. Now, a few of you did actually submit some questions in advance, so thank you so much for doing that. So I'm just going to get my questions up so we can start tackling some of these. First of all, the first one that's come up on my list, I'm going to share this answer with Knowlton. The first question is, I'm 82 years old. How can you help me? Now, I mentioned this at the sort of the beginning. Staircasing isn't for everybody, and a lot of people will continue through their shared ownership journey quite happy with the investment that they've made and the share that they own. We all know how much escalating house prices are, specifically in some areas of London. Private renting is becoming quite an expensive route, and obviously open market house prices are becoming extortionate, and sometimes shared ownership is the only way to have that security of tenure. But otherwise, I'm going to hand you over to Knowlton, who can perhaps tackle the other side of that question.
Yeah, I mean, there's so many sort of aspects to this question, but I think it's come to me because we already have a couple who are in their 80s, and we are going through a transaction with them, and the challenge that we have is that they do not have an email, they don't have a mobile phone, they only have a landline, and so we've asked them to come to the office, and we've managed to get everything together so that they can sign and get everything ready. So I guess the response is that we will adapt with what your circumstances. We will communicate with you and to get the matter progressed, if that's what this question was aiming at. We have put in place all the latest IT features here. People click on the links, and we send the email, and they accept the quote, and it's meant to do this instantly and within the next couple of days. But so, for some people, that's probably not what they're looking at. So we are happy to work with whatever your circumstances are. That's all I had to say on that, Sarah.
Thank you, Knowlton. I'm going to sort of mix between some of the pre-submitted questions and some in the chat, because there's one here from Charlotte that's at the top of my list. So thank you, Charlotte, for submitting this one. Would anyone be able to speak to owning 100% on a house? Would buildings insurance, which is coming under service charges currently, be the owner's responsibility from the point of 100% ownership? Now, when you buy a house and you staircase to 100%, typically you then own the freehold, so it would be your responsibility to cover your building. You would get buildings insurance. Typically with a house, there aren't generally any ongoing service charges, so the service charge element would move away, and you would own the freehold. Much like if you bought a freehold property on the open market, you've now converted that home to freehold. So thank you, Charlotte, for that question. I've now got a question that I'm going to pass over to Paul. Now I'm talking a bit quicker now because we've got so many questions coming in. I want to try and tackle as many as we can. Drawing from a mortgage to pay to staircase, can this be done at the point of remortgage?
Thank you, Sarah. Yes, reading the question there, that is probably a very popular time to have the financial assessment. As I said on my slides, what we would do upon the financial review is look at the existing lender and what rate they would provide for that remortgage for staircasing and the whole of the loan up to staircasing compared to the other lenders, which we highlighted a few on this slide. So you're actually doing two things at the same time, looking at the best mortgage rate, and actually we can establish across all those lenders of choice what the maximum staircasing would be available. Hopefully that would be 100%, but if it's a trench of 10%, 25%, we would ensure we've got the best rate. So absolutely, anybody who's got a rate expiring over the next 3 to 6 months, please get in contact, because that is a prime time to review. Rates are always changing, as we know, but we can give you instant market access through one of my shared ownership specialists. So yeah, absolutely, yes, yeah.
Lovely, thanks, Paul. There's a good question in the chat as well from Simon. What if I don't need a mortgage and I've inherited a lump sum and I want to staircase? Yes, you can staircase with cash. That's possible. So just get in touch with the team. We have a lot of people in that particular scenario. If you inherit some money, you can absolutely staircase using cash. So thank you for that question, Simon. I've got another question going over to Knowlton now. How does increasing ownership help with increasing the leasehold if it's below 100%?
So I think if I break down this question, how does increasing ownership, how does staircasing effectively help me with extending the lease? So I think the question is, how does staircasing help me with extending the lease if it is below 100%? Well, staircasing helps you towards achieving full ownership of the property. Extending the lease makes your property more marketable. When you are less than 100% ownership, you do not have full rights to extend your lease. There are two ways to extend a lease. You only have one of those available, not the other one. So I think the general advice is that you should put your funds towards staircasing, and when you are at 100%, you can then extend your lease. Of course, you've got to weigh this against the fact that the lease term might go under 80 years. In which case there are cost implications as the law stands. The law will change very soon, but that at present it still is that under 80 years, the cost of a lease extension is quite high. So yes, that's how it helps you effectively. So I think
it's quite a complex question, that one, isn't it?
And
I think
it is.
If the person that asked that's on the call, I probably encourage you to reach out and have a chat with Knowlton if you're thinking about doing a lease extension at any point. So definitely get in touch.
Make a note of our
Knowlton.
details. Thank you.
Definitely. There's a question in the chat as well. I'm going to direct this one over to Paul. How should people decide how much they should staircase by? Does that decision come out of that financial assessment? How would you advise a customer?
Yeah, I think, and it's a great question, because the biggest thing for a higher mortgage amount, if they haven't got a cash funds to put down, would be raised from the equity, and often that's all linked to salaries and outgoings, because the biggest thing is we want any staircasing journey to be affordable and sustainable. I can advise on most conversations we have with leaseholders, they often quite like to drive as higher ownership as possible, and as we said earlier, to pay less rent and have a higher ownership. So it will all be part of that financial assessment, that if somebody's going from, say, 50% shareholding, they're looking at 75, 100%, we would make sure any percentage, as I say, is affordable and sustainable for each and every client, subject to the mortgage lender, of course. That could be their existing mortgage lender or a different mortgage lender. But it is based on all affordability, as it was when everybody purchased their initial purchase. So no different. Yeah.
Fab. Thank you, Paul. I'm going to take the next question. Why do I need to pay for an independent valuation? And surely this should be split with the housing association. I think Sarah sort of touched on this a little bit in her presentation. So MTVH, so Resi, we don't value homes. It's actually stipulated within your lease, and the government have also put into effect that we need to have a RIC survey to determine the value of that your home. Now, that's designed for fairness. It's to make sure that everybody's on a level playing field for calculating particular values. Now, I understand that there's some thought that housing providers should contribute to RIC surveys. In practice, unfortunately, they don't. But what we can do is we do recognise that there is an expense when you're looking to staircase. So where we can, we offer an incentive that will help with those onward costs, which is usually when we do any sort of incentive at So Resi, if £100 mark. So you'll often see some incentives floating around as the years go by, and this is the first time we've been able to get £1,000 agreed. So it's a reasonable amount that we can help out with those onward costs. So I do hope that helps. I'm going to move on to some other questions. Oh, there's another one about inheriting money, but I think we've sort of tackled that one. Paul, what would be the most cost-effective way of staircasing to minimise legal, admin and mortgage costs? What advice could you give?
Well, I think, as Knowlton said earlier, with each trench of funds, there is obviously a cost. So for the clients who we've had a full assessment with, and as I say, these clients could have been at 25%, 50% share, the most cost effective, if affordable, would be to staircase to 100% home ownership, because then if you staircased every 2 or 3 years, of course, there's a legal fee, survey fees, as you've mentioned. Obviously, at the minute, there's an incentive. Hopefully, there will be ahead. So that would be the most cost-effective, to staircase to the maximum, 100% ownership. And then, of course, that client wouldn't pay any rent, etc. As you mentioned, if it's a house, then the only thing which will swing to them is the buildings insurance, but service charge and everything else would drop away. So that is where clients have been very happy if they can increase to 100% home ownership, because rather than different trenches. So that would be the way forwards for the most cost effective, if possible and affordable.
Perfect, thank you. Paul, I'm going to chuck another question at you, because there's another good question that's just come in from Phil. I understand that after staircasing, your rent typically reduces and your mortgage repayments increase. Generally speaking, do these two costs even themselves out, or is it inevitable that your costs will increase when you staircase?
Great question, and a great reason why to speak to one of our specialists, because they'll tell you exactly the figures of what you'd save on each side. And of course, every situation is different, every mortgage rate could be different, etc. And Phil, as you said, the great thing there is if you look at your initial mortgage amount you borrowed, of course, you'd have had a capital interest repayment mortgage. So your mortgage is reducing each year, and your equity, as you said, Sarah, with property prices increasing, the gap in the middle has got bigger. And of course, the more of that gap we buy with staircasing is the more ownership of the leaseholder and less rent, etc. So obviously different rent percentages. So Phil, I would say get into contact with Emma and speak to one of our specialists, and they will answer that question exactly for you. Yeah.
Absolutely. You know, you need to weigh up all of the costs and if it's right for you. We've actually got a calculator on our website. It's not completely tailored, or I do still recommend that you speak to a specialist, but it can give you a rough idea of what your rent could cost if you staircased, and that's on our website, sharedownership.co.uk. Okay, let's have a look at some other questions that have come in. Lots of questions about lease extensions, but I think we've covered that one off now. Knowlton, there's a question that's been submitted about preserved equity. I'm wondering why MTVH have a limit to staircase, and after this you must staircase to 100%, limit to staircase to 75%, and after this you must staircase to 100%. So I'm guessing this must be some sort of older sort of staircasing restriction. I'm not entirely sure, but if you could take the floor with that one, you're the expert.
I'm not too sure about where the 75% has come from. I think what this means is why can I buy increments up to 75% and then all of a sudden have to jump to 100%, because that's what the lease says. You can't buy after 75%. You can't buy any more. Some of us would like to staircase to 85%. Yeah, the lease says that up to there, and then you've got to buy more. All the way to 100%.
Yeah. So we see so many different types of leases. So bearing in mind MTVH has been going for 40, 50 odd years, I think. So we see leases that are quite old, and everything that you can do with your property is detailed within your lease, and there's staircasing provisions. Some of the newer ones are far more flexible and easier to read. But again, if you've got any questions about what you can or you can't do, and the lease is written in a particularly age-old way, I would also encourage you, reach out to Knowlton and his team, because they'll be able to guide you through that process and let you know exactly what you can and can't do. We've got a message that's come in from Rory. Are there mortgage lenders? So I'm going to put this one over to you, Paul, again. Are there mortgage lenders supporting buy-to-let mortgages when staircasing to 100%? And are there any legal considerations if exploring this?
That's a different question. So if I'm right, so you're staircasing to buy the property outright, and then you'd like to consider that property to a buy-to-let. Okay. Obviously, breaking it down with one of our specialists, it would be staircasing options, and if the staircasing is an option to 100%, for any buy-to-let or consent to let from a mortgage lender, that would be the second part of those discussions. Often once you own the property outright, and then if you then decide that you wish to let the property, that would be subject to the mortgage lender approval, or switching to then a buy-to-let mortgage. But there's often various conditions on both sides. So again, that's a perfect journey into receiving advice from one of our specialists on the options. One, breaking down the staircase, and what mortgage lenders involved at the moment, and two, how definite is the buy-to-let decision upon 100% ownership. Often, if it's not a shared ownership mortgage anymore, then you've got more freedom to have those conversations away from a housing provider such as Resi.
Just to add on that, on the last part of the question, up until 100% staircasing, you need consent to underlet, but after final staircasing, the restriction goes away. It just drops out, so you don't need no restrictions after that. So there's no legal consideration.
Lovely, thank you. So Rory, I hope that's answered your question. Effectively, when you staircase to 100%, that property is yours, and there is far more flexibility. You don't have to go to the provider to ask for consent to do building modifications or anything like that. So yeah, again, if you've got anything specific about your property, your lease, because everybody on this call will have a lease that will be very different to another, so it's worth getting detailed specialist advice and understanding exactly what you're able to do. There's one more question here that I'm going to go over. So, can we purchase the full value in one go? What are the additional fees, and how long does the valuation last before we go ahead? So yes, you can, is the short answer. If it's affordable to you, you can absolutely purchase the remaining part of the share in one go. Again, you need to seek specialist financial advice and legal advice as well. In terms of additional fees, it's the same as if you were staircasing, so your RICS valuation and your legal costs. The valuation typically lasts for 3 months. Occasionally we can get an extension on that, but yeah, I hope that answers that question there as well. I don't know if Paul or Knowlton, you've got anything to add to that if you're staircasing in one go? No.
No.
Fabulous. Okay. Well, thank you, everybody. There's been some really good questions submitted. I hope you found this useful. As I say, I'd love to hear from you just to see if you have found this a helpful webinar, if you'd like to see more of them, and if there's any other topics that would be meaningful to you as our customers effectively. So thank you for your engagement and your time. And I wish you all a very Merry Christmas. Thanks very much. Bye-bye.
Right.